Today, the Evergrande End Game. Hello again, it's Martin North from Digital Finance Analytics, welcome to this post covering finance and prop news with a distinctively Australian flavour. Well, Evergrande shares plunged on Thursday after saying it scrapped talks to offload a stake in its property management arm and that real estate sales slumped during a peak home buying season, worsening its liquidity crisis. China Evergrande Group scrapped talks to offload a stake in its property management arm and said real estate sales plunged about 97% during peak home buying season, worsening its liquidity crisis on the eve of a dollar bond deadline that could tip the company into default. In statements to the Hong Kong exchange late on Wednesday, Evergrande added that it made no further progress on asset sales and may not be able to meet its financial obligations. Its shares plunged as much as 14% on Thursday, after resuming trading following a 3-week halt. Evergrande shares have lost more than 80% this year. The property management deal fell apart even after government officials in Evergrande's home province of Guangdong helped broker the talks. The setback comes days before the end of a grace period on a dollar bond coupon that Evergrande failed to pay in September. The developer's 8.25% note due March 2022 was trading at 23.8 cents on the dollar. Evergrande's cash crunch has become one of the biggest risks to the Chinese economy, eroding confidence in a real estate sector that by some estimates accounts for nearly a quarter of gross domestic product. The crisis is also fueling concerns about financial contagion, with at least 2 other developers defaulting on dollar bonds this month, and yields on Chinese junk bonds are hovering near the highest level in a decade. Evergrande said it ended talks last week to sell 50.1% of its stock, Evergrande Property Services Group Limited, for around 20 billion Hong Kong dollars or $2.6 billion. The potential acquirer, Hobson Development Holdings Limited, said in its own statement that it regrets to announce that the vendor has failed to complete the sale of the Evergrande Property Services stake and asked for its shares to also resume trading. Guangdong officials offered to arrange bank loans to Hobson to fund the stake purchase. The company failed to reach an agreement, partly due to opposition from some Evergrande Property Services independent directors and creditors. Trading in the firms had been suspended since the start of the month, pending announcement of a major transaction. Evergrande Property Services fell as much as 10% on Thursday. Hobson rose 6.6%. Meanwhile, shares in Chinese developers rallied in Shanghai and Hong Kong after government officials, including Vice President Li Hu, said risks in the property market are controllable. Evergrande said its contracted property sales for September through to the 20th of October totaled 3.65 billion yuan, a tiny fraction of the 142 billion yuan it recorded from September 1 to October the 8th last year. Tumbling sales and the scrapped unit deal increased pressure to find alternative ways to raise cash. Bondholders, banks and other creditors have grown increasingly concerned about being repaid by the world's most indebted developer, which has more than $300 billion of liabilities. The 30-day grace period for an $83.5 million bond interest payment expires this weekend. If Evergrande fails to pay by then, creditors could potentially trigger a process that leads to cross-defaults on other Evergrande debt. And separately, Evergrande secured agreement for an extension of more than 3 months on a $260 million bond issued by Jumbo Fortune Enterprises and guaranteed by the developer, according to a report by credit research provider REDD. Financial regulators have encouraged Evergrande to take all measures possible to avoid a near-term default on dollar bonds while focusing on completing properties and repaying individual investors. The company has also fallen behind on payments to banks, suppliers and holders of onshore investment products. Selling prized assets, even a discount, was seen as central to the strategy of finding cash. The sale of the management unit could have brought short-term relief to Evergrande's liquidity crunch. It could have also bought time for the developer to fix its offshore funding issues. The property services business, which went public in Hong Kong last year, has been a useful source of income for the cash-strapped parent. It reported full-year net income of 2.65 billion yuan compared to 10.5 billion yuan for Evergrande. The index has fallen less than its parent in Hong Kong, trading this year with a drop of 43% before the halt, compared to Evergrande's 80% decline. Hobson is a Guangzhou-based real estate firm controlled by the family of billionaire Chung Man-yi. Listed on the Hong Kong exchange since 1998, the shares gained 38% this year before the trading halt. The end of talks comes as smaller Chinese real estate firm Sonic Holdings failed to repay interest and principal of its $250 million note due on Monday, and followed a surprise default earlier this month by Fantasia Holdings Group, suspending trading in Hong Kong on Thursday after cancelling its request to extend the maturity of a dollar bond by 3 months. A government clampdown on real estate companies threatens to create more defaults, adding to broader risks facing China's economy. Home prices sank in September the first time in 6 years, and economic growth slowed last quarter as the property and construction industries contracted for the first time since the start of the pandemic. So far, authorities are largely resisting the urge to ease up on the industry. While there are individual problems in the real estate market, the risks are controllable overall, Vice President Liu said on Wednesday. Market moves are a stress reaction to some defaults, and property sector financing is becoming normal, People's Bank of China Deputy Governor Pang Jiasheng said. In fact, they doubled down, with China's banking regulator vowing to keep its curbs on the nation's property market and dismissing concerns that the crisis enveloping China Evergrande Group will have any major impact on the credit profile of the sector as a whole. The property controls have achieved good results, and the government will refrain from using the real estate sector as a short-term economic stimulus measure, Li Zhongri, an official at the China Bank and Insurance Regulatory Commission, said at a briefing in Beijing on Thursday. Evergrande is an individual case and won't hurt the overall credibility of Chinese firms, which is backed by the country's economic stability, he said. Property controls to stamp out speculation in the housing market have weighed on the country's indebted developers, which are now seeing sales plunging and home prices snapping a years-long streak of increases. While officials have told banks to speed up mortgage lending again, the central bank has indicated that contagion risks from Evergrande are controllable and unlikely to spread. Property lending growth at Chinese banks slowed to 8.6% this year through to September. Wang Zhoi, a spokesman at the CBIRC, said that's down from 12% in the first quarter, which was the slowest pace in 8 years. New home prices in 70 cities fell 0.08% in September, the first drop in 6 years, official data showed this week, posing a potentially big blow for an economy that counts on property-related industries for almost a quarter of its output. Now, I think we're at the end game now with Evergrande, and whilst it's being held up as an isolated incident, it's symbolic of a much wider range of risks in the property sector in China. And the contagion from this could be significant. We're going to have to watch this very closely over the next few days. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.